Recording. It should begin in a minute and we'll get started. Awesome. So, welcome to the webinar number 15, which is focused on unit economics and costing for the smart protein sector. And we are conducting this workshop with our partners on the challenge CI Co. You've previously attended a couple of workshops we organized with them on business model canvas and also some insights on market research, etc. So we're very happy to conduct this workshop where Mr. Ram Motwani, who's the consultant at CICO, is present as our expert mentor for today. Ram's come with a finance background of 15 plus years. He has rendered professional services to 200 plus early stage and mature small and medium businesses across manufacturing, trading, healthcare, Internet of Things, clean tech, agri-tech, and SaaS industries. He has advised 30 plus clients on raising more than $10 million in equity and debt. He freelances to help advise clients on forecasting, fundraising, valuations, working capital, and management analysis. So that's a brief background about Ram, and we'll love to understand a little bit about what Ram does and what his work is all about when he introduces himself. Before that, I'll also introduce quickly Nicole Rocque, who's my colleague at GFI India and also an innovation specialist. She'll be helping me with the moderation of the session today and tomorrow. She'll be hosting the session tomorrow, so you might not hear from me as I'm off from work. Once again, really thankful for this wonderful opportunity that our participants of phase 3 have in terms of understanding and learning more about costing and unit economics. Yesterday's session, we were speaking with a bunch of entrepreneurs who stressed a lot of importance on unit economics from Shandy Global and from Naka Foods and Brink Accelerator. So we are very curious, a lot of these participants who were present yesterday, to understand more about this. And I'll invite Sushmita to quickly say a few words introducing the session and the speaker before we get started with Ram.
Hi, thanks, Shardul. Hello, everyone. We have met before in one of the sessions that CI.co hosted. And you have been, first of all, congratulations for making through this far. And I'm sure you are working on your ideas. And please keep your questions handy. So as you come across some concepts that you don't know or you want to figure out how to apply them, feel free to ask and make it as interactive as possible. It would be better. And I will not take more time. I will hand it over to Ram. Ram has been working with all the startups and as a consultant for a very long time. So Ram, over to you.
Thank you so much. Thank you so much. Good evening, everybody. So let us start this discussion and let us try to make this session a discussion session. So we are going to discuss on costing. Before we start this discussion, I would just like to know how many of you are from business family background in the chat box. And please reply to everybody. How many of you I'm waiting for your answers in the chat box.
Yeah, if you could just mention the business or sector accompanying it, that could also
fine.
be helpful.
Okay, me. Okay, good. Good. Okay. So next question. How many of you are from commerce background? Commerce background. Me. Okay. Science. Okay, good. Very good. Okay. Okay. Moving on. What is the stage of your startup? When I ask stage, ideation, very good. Ideation, inception, very good. Okay, okay. Nice. How many of you understand cost workings? Testing, okay. Natasha ma'am noted testing. How many of you understand cost working? Yes or no? In the chat box. Yes, very good. Yes, understand, very good, very good. No, no, no. Yes, yes, no. Okay, okay. Partially. Very good. Lovely answer. Hebul sir, well, lovely answer. Partially. Good. Okay. Please let me know in the chat box few of the jargons you know. Any of the financial jargons. Not completely. Have I noted? Okay. Nobody knows completely. Don't worry. Even I don't know completely. EBITDA. Okay. SKU. Very good. Consumer price index. Okay. Margins. Very good. More jargons. More jargons. Okay. IRR. Very good. EBITDA. CGT. Okay. What is CGT? Somebody has mentioned CGT. What is CGT? APR, break-even point, revenue. Okay. CAC, ROI. Okay. Capital gain tax. Oh, very good. Nice. Okay. So let me. Okay. So my objective today, when we are going to discuss this, is my first objective is that after this discussion is over, you should have broad sense of costing. And the most important objective is you should be very clear that it is not required at your stage of startup. It is not required at your stage of startup. Okay. Let's move on. What is the structure? We are going to discuss why costing, the NNN concept, how costing, 5 simple steps, and then we will test your knowledge. So in next 90 minutes, we will have 20 chat questions, 2 real life case studies, 2 takeaway stoppages, 2 test your knowledge questions, Netflix, and lot of fun. So again, back to our structure, why costing, the NNN concept, how costing, and test your knowledge. Okay. Tell me in the chat box, what is profit? What is profit? In the chat box. Surplus earned. Okay. What is profit? I'm waiting for more answers. Gain on investment, revenue less cost. Amazing. Very good. Very good. Revenue less cost. Selling price less cost price. Amazing. Very good. Very good. More answers. Correct. I agree with this. Profit is revenue less expenses is equal to profit. It is a mathematical function. You can also say sales price less cost. When you consider it at unit level, it is sales price less cost is equal to profit. Okay. So tell me, where should you focus? Sales price or cost? In the chat box, where should you cost? Oh, this session is on cost. You need not select cost. Cost. Very good. Amazing. Both. Very good. Devika ma'am, very good. Both. Okay. Cost. Both. Okay. Okay. Chalo. Let us do one thing. Let me take you to this Jet Airways case. It is from profit to price. It is from cost to price, or it is from price to cost. You will come to know what happened with Jet Airways. So Jet Airways, when it was formed, the travel was only for upper class and upper middle class. Cost control wasn't something to be concerned about. So the whole business model of Jet Airways was on quality services. What happened is Jet did extremely well until 2005. It was the best airlines available. Now new airlines entered. We all know Indigo, Spice, Vistara. They joined the market, and Jet found it very hard to compete given its cost structure, and that required serious change in the business model. What do you think what Jet did? Anybody in the chat box? What was the reaction of Jet? One of the best airlines, new entrant comes into the market, provide everything at low cost. Jet, who has never thought about cost structure in its life, now it's stuck up. What was the reaction of Jet? Okay, raise more money, discounting, drop their prices. They dropped their prices. They actually dropped their prices, and that is what gave birth to Jet Connect and Jet Light. We all know what happened in Jet Connect, and there were lower prices without working on cost. They decreased price through, okay, they decreased price, and ultimately what happened? Jet was grounded. They have again reduced price as per the market segment. Amazing, amazing. Reduced price as per the marketing segment. Better deals, discounting, drop their price. Good, very good, very good, very good. Okay. So whenever what happens is when so tell me if you are in this place, you are the first one in the industry to bring the required product and you are charging premium on your product. Competition chips in. What will be your reaction? Will you actually target on that segment and reduce your price and quality, or you will target on niche? What would be your reaction? If you were in the place of Jet, I will focus on niche. Okay, very good. Reduce the price as per the market segment. Niche, okay. Nobody is cost player here. Very good. More answers. Cost cut is another area beside quality. Noted. You're right. Okay. Okay. Tell me, if you are category leader, what will happen? Cost cut in other areas beside quality. Build their premium further. Okay, very good. Tell me, if you are category leader, somebody who is leading the category, something which is new, as you all are trying to do, what will you do? Will your answer remain same? You will go for cost cut, you will go for niche. What will you do? If you are category leader, because you are going to be category leader in your space, correct? Will you focus, if you have already built the product, you are in the market, selling it at premium, somebody comes in, will you focus on cost or on sales price? In the chat box. Okay, sales price, cost. Okay, very good, very good. Let me bring to you, let me both. You will try to maintain the brand image, would alter the cost, less profit with larger customer base. Amazing, very good, very good. So we have volume players also. Try to maintain brand image, would alter cost. Okay, less profit with larger customer base. Very good. See what one of your, somebody from your industry has done. This is something which is coming from the annual report of 2019 of Beyond Meat. And they are saying we intend to pass some of this cost saving on to the consumer as we pursue our goal to achieve price parity. We look at price scheming strategy. We look at price scheme. Oh, amazing. So you have started using jargon, price scheming strategy. Very good. So look what Beyond Meat did. Remember one thing, customer will always look at NBA. Customer will always look at NBA. What is NBA? It is next best alternative. So you have to be very, very clear. You should focus on cost or on price. What is your takeaway from whatever we have discussed till now? In the chat box. In the chat box, what is your takeaway? We discussed cost, profit. We discussed cost and price. We discussed what Jet Airways did. We discussed what Beyond Meat or Beyond Burger is doing. What is your takeaway? In the chat box. You literally have to be NBA in the alternative protein sector. You could be. Next best alternative, you could be. So okay, if you look at Beyond Meat example, they are, what is the next best alternative for them, for the consumer of Beyond Meat, is the actual meat. To always look out for market dynamics and plan accordingly. Okay, my takeaway from this is there is always a competition, and so always consider cost. You cannot afford to not look at cost. You have to look at cost in any case. Okay, let us try to shift gears. I am a startup. This is my statement as on for 2016 and 2017, and I am asking you, my investor, if we are new with many competition already, look at the price penetration strategy. If we are unique, then place at premium. Price, sir, Natasha ma'am, remember one thing, price is not determined by you. It will be determined by the market. In any case, it is not in your control. Only cost is in your control. you cannot think about controlling the price, even when you are focusing on a niche. Now coming back to this chart, I am a startup. In 2016, my turnover was 113 crore and loss was 176 crore. In 2017, my turnover was 228 crore. I doubled the turnover, 2x. My loss also was increased. It went to 213 crores, loss of 213 crores. Tell me how many of you would invest in me? If you are going to invest in me, say right in the chat, say yes in the chat box. 2016, no. Okay, noted. Thank you so much. No, yes. Thank you so much for investing in me. No. Those who are saying no, please believe me, I am going to change the world. Yes, thank you so much for trusting on me. Yes, thank you, Ishu. Thank you so much. More answers. Yes or no? Are you investing in me? Yes, yes, yes. Amazing, amazing. So all those who are no, in me, tell me, will you invest in me? We have gone, so 1 year is over. 2016, my turnover was 113 crore. 2017, my turnover was 228 crore. It was 2x turnover. Then 2018, my turnover was 600 crore, 3x. Will you invest in me? My loss also increased from 176 to 213 and now to 200 crores. Now, yes. Okay, thank you so much. Those who were no, will you invest in me? Profit needs to follow revenue. Okay, it should. You have decreased your loss. Yes, I have decreased my loss. So hence, no. Okay, you will not invest. I will invest and ask you to work on costing. Okay, increase. Okay, very good. Wait for 1 year to see the scale. Shantanu sir, after 1 year, my valuation will change. My valuation will change. You have to decide today. My valuation, it will cost you more to invest. Okay, Kavya, you will invest. Thank you so much. Okay, wait. Anybody who said yes in previous round, do you want to get out of it? Yes, but answer depends more on future of your industry. Noted. Very good. Very good. Anybody who was yes in previous year, is he interested in getting out of this investment? Say yes if you want to get out of the investment. And say no if you want to be invested in my company. In the chat box. Those who were yes, when we had data for 2 years, after the 3rd year data, are you still with me or you want to get out? In the chat box. Yes or no? Yes, still with me. Thank you so much. Thank you so much. More answers. Okay, let me add one more data. Let me add one more data for you. Yes, still with you. Thank you so much. Okay, let me add one more data. Look at this. 2016, my turnover was 113 crores. My loss was 176 crore. My gross profit was 44 crore of loss. 2017, this 44 crore of gross loss went to 15 crore of gross loss. And 2018, it became gross profit of 123 crores with a net loss of 209 crores. And my turnover was 600 crore. Now will you invest? Those who were saying no earlier, will they invest in me? See, I am trying to increase my gross profit like anything. Even though I'm making loss of 200 crores, when my revenue is 600 crore, my gross profit is 123 crore. Will you invest? Yes or no? Those who were no earlier, I want answer from those people who were not investing earlier. Okay, those who were investing in me, are you still with me or you want to get out of the company? Yes, with you. Okay, very good. Yes, with you. Still with you. Very good. Very good. Very good. Still with you. Thank you so much. So should I assume that 100% of investors are okay with me? Stick with no. Very good. I want this answer. Thank you so much. You are not investing in me. Very good. More no's. Yes. Through light worried about operational loss. Okay. Very good. You have worries about operational loss. Amazing. Amazing. Very good. Yes. Okay. Very good. Okay. Let me tell you what happened in 2019. 2019, my turnover, which was 600 crore, went to 2,000 crores. 2,000 crores and my gross profit was 700 crores. Still, I am at net loss of 90 crores. So somebody who was still, no, will you invest in me now? See, look at the growth. 2016, 100 crore. 2017, 225 crores. 2018, 600 crores. And 2019, 2,000 crores. Yes. Okay. The person who was no, who will you invest in me or no, you will not invest in me still now? And those who were yes, will they like to stay with me or they will move out of the investment? Yes. Okay. I will continue with my investment. Very good. Noted. My investors, tell me, are you with me? Will continue, will continue. Very good. Stay with you. Thank you so much. Thank you so much. Anybody who want to exit? No, with you. Thank you so much. Yes, will continue. Okay. Thank you so much. Friends, these are real numbers of somebody in your industry called Beyond Meat. They have generated turnover from 100 crores to 2,000 crores in 4 years, where the loss was somewhere around 200 crores to 87 crores or 90 crores. These are the real numbers coming from their balance sheet. This is what they have achieved. Now, take 1 minute and think about 2009. This company Beyond Meat was formed in 2009. They got listed in 2018 and we are in 2020 now. Think about 2009. Think about the period between 2009 to 2018. Those investors who invested, the founder of the company who formed the company, what would have been their thought process? What would have been their thought process when they invested? In the chat box, tell me why investors, see, look at the numbers. 2016, 100 crores, loss of 200 crores. 2017, 225 crore, loss of 213 crores. It would have been worse in 2013, 2012 or 2010. It would have been worse. Still investor invested in this company. Tell me what would have been, because you all were invested in me, correct? They had a long-term vision about the growth. Growth stock, okay. Saw potential and tapped into the wonderful, wonderful investor with bullish large TAM. Some technical terms coming up. TAM. Good. Consumer is liking their product and their consumer base is increasing very rapidly. Okay. Long-term profitability using economies of scale to kick in. Very good. Technical words. Very good. Believing in the motto of company. Okay. Amazing. So this brings me, understood the market potential. Very good, very good, very good. So this brings me to a very interesting concept. We call it and. What is this concept? Tell me in the chat box, do you know this person? Yes or no? In the chat box, do you know this person? Valuation guru, very good, very good. No. Okay, valuation guru. Yes, he is the valuation guru. Ashwath Damodaran, he is the authority of valuation for any business, including startup. He is, whatever valuation he says is the valuation of the company. Now, why I'm telling this, Ashwath Damodaran, he was valuing Uber in when Uber was in a very good stage. He was given assignment to value Uber. His strategy is he goes to the company's place to value that company. So he was doing valuation. He did all the calculations, did everything. And after doing everything, he thought, okay, my work is over. I have done my valuation. Let me take a round in the campus and try to see the campus of Uber corporate office. He started moving in the campus and he found one of the old investor of Uber who was actually known to Ashwath Damodaran. Now, Ashwath Damodaran, he was talking to that lady and that lady actually told him that, how have you valued Uber? So he was like, Uber is a cab company. And that lady stopped him and told him, Uber is not a cab company, it's a logistic company. The moment Ashwath Damodaran heard about this, he was surprised, he was shocked, because he had valued the company considering it as a cab company. But It turns out to be a logistic company, and the whole valuation went to 5x. That is the beauty. That is the beauty when you look at the narratives, when you look at the narratives of what is there in the whole story. So what is this NNN? NNN is I think my screen is not visible. We cannot see your screen. 1 second.
Yeah, just share your screen again, Ram. Yeah.
Okay, I think it's there. Correct. Okay. What is NNN? NNN is numbers and narratives. Numbers and narratives. So how many of you are MBAs? Any MBAs in the class? Any MBAs in this discussion? None. Okay, great. So that makes it interesting. So to be MBA, very good. So to be MBA would understand this. All these MBAs have this habit of preparing a 2x2 metric, and it actually helps to make your thought process very constructive. So basically it's number and narrative. So look at this 2x2 metric of number and narrative, how it operates. If you are low in number and you're low in narrative, this is not done. You are not going to get any valuation for yourself. This is not going to work. You are low in narratives but good in numbers. This is something which is not for startup. So we are trying to avoid this. This is the place where most of you are more on narratives and less on numbers. So try to focus yourself here. And this is the target, the place to be, where your numbers, somebody like Beyond Meat, where you have numbers, turnover of around 2000 crores and also narrative about the market. So if you look at Beyond Meat, they are somewhere here, good narratives, good number. If you look at your startup, you are somewhere here. You have to move from here to here. And this is what NNN system is. So what is your takeaway from Ashwath Damodaran discussion in your chat box? What is narrative exactly? Okay, narrative exactly. Narrative is, okay, Uber is not a cab company, it's a logistic company. What is this? There's no number in this, correct? It changes the perspective of looking at what you are looking when you are valuing that company. And this is what Uber is doing here, correct? It is all stories. The vision where you look at what actually you are thinking about, what you think the market would be in 2 years and how you are actually looking at it. Narrative is an art of describing or storytelling. You can say that it's an art of storytelling. You can say that. But it plays a very big role when you get the valuation because you don't have numbers. I personally believe everything is number. But when you don't have number, you should have something. So you have to be very clear, very clear that it should be mixture of N and N. Numbers and narratives should be there. Okay. So what is your takeaway from this discussion? Ashwath Damodaran. Why is the value chain narrative called logistic company? Shantanu, tell me, if you are valuing a cab company and if you are valuing a logistic company, your everything will change, correct? Your revenue stream will change, because if you are a logistic company, your revenue stream will change. It will not be only taking a person X from point A to point B. It will include everything. It will include food delivery also, correct? Uber Eats and something, and then ultimately it was closed down. But your revenue stream will change, your cost structure will change, everything will change. And just by looking at Uber not as a cab company but as a logistic company, it changes so many assumptions, and that is why the valuation goes 5x. And that is the beauty of narratives, and that is what you should use when you don't have numbers with you. Everything changes. Okay. It's important. Investor buy-in vision of the startup. Yes, it is. So the second takeaway for me from this story is put your NNN to work. You may not support by numbers, because numbers are all assumptions. You only have narratives to work around, to tell about your industry, to tell about what you are doing. That is the beauty of NNN here. Okay, shifting gears. How how of costing. So many of you asked this question which were related to how of costing. So we have 5 simple steps for costing. How do you calculate costing? What should I do? What is step 1? What is step 2 to calculate my costing when I am only at ideation stage? Okay. Before we shift to how of costing, I want you to answer in the chat box few of MCQs. So your first question is, variable cost varies according to the volume of output. True or false? In the chat box. True or false? True. Okay. True. True. Muskan, true. Very good. True. Okay. Okay. True, true, true. Okay. Moving on to next question. Fixed costs are those costs that do not vary with the output or sales volume of the business. True or false? True. True. Costing में और कुछ है ही नहीं. Very good. Very good. Okay. Depreciation is what? It is fixed, variable, semi-variable. It depends. Depreciation as a cost is what? You all know what is variable cost. You all know what is fixed cost. Tell me depreciation is what? It depends. Okay. Depends on what? Those who are writing it depends, please write depends on what? Depends on what? Try to answer. Depends on what? Depends on the product. Okay. If product is A, you will have fixed cost. If it is B, you will have variable cost. Okay. On the asset in question. Asset in question will decide depreciation. Okay. Fixed. Okay. Assume rate of depreciation every year. We can do that. That is again mechanics of procedure of calculating cost and accounting method. Could be fixed cost. Could be. See, I will go with those who answered it depends. It depends on so many things. We'll come to it. Okay. Your last MCQ. What is break-even point? It depends on nature of product. Could be, could not be. Production capacity. Could be, could not be. Your last MCQ. What is break-even point? Point at which business will break down. Point at which business will start earning profit. Point at which business will start commercial activity or it will incorporate. Profit is equal to cost. When net loss is 0. Okay. Start earning profit. Very good. Start earning profit. Yeah, you all know costing here. Why do you need a session on costing? Start earning profit. Profit earned. Very good. Very good. Very good. Very good. Amazing. Okay. 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 So I think we will do this in next 5 minutes only because you all understand costing. How do you do costing? Step 1. Think of realistic output. Think about what would be your realistic output. What would be your target production? How many units? If it's a service, try to think in terms of customer or services. Step 2, list all the cost. List all the cost. How do you list all the cost? Think about the cost. What would be the cost? Identify your competitor or lookalike business. Try to get their balance sheet and write all the heads of cost which are there. Do all the necessary addition, subtraction in what your business model is and add for contingencies. This is how you can derive the cost. So your first step is think about realistic output. Second step is get the cost list in your head. It can be available from balance sheet of your competitor or lookalike business. It is there. Everything is out there. Everything is out there. Look at Beyond Meat and you will understand what cost structure they have, what amount they are incurring on R&D. It is everything is there on paper. Okay. Step 3, identify your variable cost. You all know what is variable cost. Identify your variable cost. Acha, do you know what is semi-variable cost or semi-fixed cost? In the chat box, yes or no? Semi-variable or semi-fixed cost? No.
Ram, I had
yes.
a question on previous slide. Can we take it later?
No, you can ask the question. You can ask the question. If you just feel free to stop me and ask the question. Yes, please ask the question. List all the cost.
Okay,
Tell
perfect.
me.
So in case of our sector specifically for like plant-based meat, dairy, there are very few companies, with public balance sheets, to have a lot of this analysis. Are there any other proxy methods, back of the envelope ways of just checking some of these things that you could advise some of our attendees today?
So basically, if you try to look like business, you will find everything. In any case, when I was reading this balance sheet of Beyond Meat, they have identified the process of converting. They have identified there are 3 steps in the process of converting the final product, which is the Beyond Burger product. And when you look at those processes, I was able to look at those processes and look at industries those who are using the same processes on different product. If you look at those industries, it will tell you the list of the cost, because the process is same. The raw material and finished good may change, but the process is as much as what we are doing in a plastic molding industry. I was very happy to look at their balance sheet and the way they have explained it. So you can go to those lookalike processes and try to see their balance sheet and find the cost head and write all the cost head. It would be covered. It would be covered. That is how you can get the data of any process. Unless it is truly scientific and very high technical, which is not revealed by any company in their balance sheet. Otherwise, everything is there. Okay.
Yeah, thank you so much.
Coming back to our question, what is semi-variable, semi-fixed? Most of you have answered no. Somebody answered okay. At some point in time, after that point of production, it becomes variable. Okay, wonderful. So basically, it's a step cost. It's a step cost. It behaves like a fixed cost for certain time, and then it becomes variable. So it's basically, if you are confused, don't worry. People will confuse you, tell you technical what semi-variable, semi-fixed. Don't worry. Consider it as a variable cost. Don't worry. In case of doubt, every cost is variable cost. In case of doubt, if you are not clear what to do, what not to do, every cost is variable cost, and you will come to the correct 100% correct costing. Okay. Few example of variable cost: raw material, direct wages, sales commission. Okay, list of fixed cost. What is fixed cost? You all know what is fixed cost. In fixed cost, you have to divide cost into attributable and not attributable cost. What is attributable cost? The cost which you can specifically attribute to the unit which you are talking about. Say for example, if you are talking about a unit of, say for example, one burger, one Beyond Burger, if that is the unit, if you can allocate a specific packing machine which is used only for Beyond Burger, that becomes attributable cost to Beyond Burger as a product. So Beyond Meat has 4 or 5 products. Out of this 5 products, one of the product is Beyond Burger. Beyond Burger, if a specific packing is done for burger, even when it is fixed cost, depreciation would be fixed cost, or the machine maintenance or machine rental would be fixed cost, it becomes attributable cost. Okay. Few example of fixed cost: it is rent, admin, salary, everything. Attributable cost, as I gave example of Beyond Burger. Step number 5, calculate break-even point. What is break-even point? You all know. Where my cost, when my sales is equal to my expenses, no profit, no loss, that is break-even point. That's it. Costing is done. There is nothing more in costing. Anybody who is telling you unit economics, variable costing, margin costing, believe me, it is all BS. Believe me, this terminology is not at all, it is never come to you in your life. It is all about the logic. It is simple mathematics. Simple math. And what will happen? Say for example, if you have selected a fixed cost and variable cost, it hardly matters. It hardly matters. The whole idea, I will tell you, when we go to Netflix, I will tell you what is the whole idea when you present your case before the investor. So again, coming back to our 5 steps, I am just repeating those 5 steps. Step number 1, okay, I am just repeating. Think on realistic output. Step number 2, list all the cost. Step number 3, identify variable cost. Step number 4, list the fixed cost. Step number 5, calculate break-even point. You have to calculate the break-even point. Somebody asked, can you explain the break-even point? Could you explain the sales aspect in step 5? Okay, sales. Sales is your revenue. Total sales, 2,000 crores. Beyond Meat, 2,000 crores is my sales. That's it. That is the total sales. What is the variable cost? It could be COGS, it could be cost of manufacturing product, it could be anything. Okay, what is fixed cost? Fixed cost, as we mentioned, the cost which will remain fixed, which will not vary with the turnover. Balance is profit. Okay. Okay. This takes me to Beyond Meat example. Can you see this number, Beyond Meat number? Look at those numbers. From 2016 to 2018, the revenue, you have seen this number, the revenue 100 crores, 200 crores, 600 crores, 2000 crores. Cost of goods sold, gross profit and gross profit margin. Gross profit, look at gross profit. Minus 44 crore, minus 15 crore, 123 crore. Tell me in the chat box, what is your estimate for 2019? What would be COGS for 2019? Look at 2018. 493 crores is cost of goods sold. My gross profit margin is 20%. My gross profit margin is 20%. My COGS is okay. Look at the trend and then throw the number. I will ask, how do you, what was the logic of 800, 900, 400, 500, 700, 900? What is the logic? What is the logic? How are you coming to this number? Look at 2018 number, 20% gross margin. Look at 2017, 7% gross loss. From 40% gross loss to 20% gross profit. Estimate for 2019. We have real numbers. I'll show you the real numbers. My turnover from 600 crores went to 2000 crores, 3x. What is your estimate for COGS for 2019? 700 and 900. Okay. I want answers in the chat box. See, you have to work on those numbers. If we have 30 odd participants, I need at least 20 answers. %40 might be expected in 2018, so around 800, 900. Okay. Okay, Rahul sir, thank you so much. Nikita ma'am, 1200, what is the logic? Kavya ma'am, 800, 900, what is the logic? 40% is expected in 2018. Rahul sir, what is the logic of expecting 40% from 20% to 40%? What is the logic of having about 50% GP margin? And what is the logic, Shubham sir, of 50% gross margin? Rahul sir, I'm waiting for your answer. What made you think that it should be 40%? From minus 40% to plus 40%. Is it gut feeling? You can write it's my gut feeling. I believe it should be like that. Close to 2000. Okay. Anisha ma'am, answer. Linear regression might help. Amazing technical terms. Very good. Find slope of growth. So nearly 800, 900. Very good. Very good. More answers. Yes, recovery of previous year losses may be on agenda. Okay, it could be. It could be. So they will start charging more price. Price is not in your control, sir. Believe me. Anybody who can come and tell you that pricing is an art and do your pricing and look at the niche, price is not in your control. Whatever niche you find out, competition will come in. It has to be driven by market. Nobody in this world can drive the price. No business can drive the price. Believe me. More answers. I want logic. Why do you think 40%? Why do you think 50% margin? Slope 800, 900. Okay, let me tell you what were the real numbers. This is the real number. Approximately 30% growth every year. Okay, okay. In 30% growth in gross profit margin. It could be, it could be, it could be. So these are the real numbers. See what happened to them is minus 39%, minus 7%, 20%, and now 33%. Can you tell me what is the logic of this in the chat box? What happened? Why this profit, gross profit, which was minus 44 with 100 crore of turnover, went to plus 700, 35% of gross profit margin at 2000 crore. What is the logic? In the chat box, tell me what comes to your mind. Don't worry. See, every answer is correct answer. All costs have been optimized. Very good. Very good. Still they are at net loss, correct? More answers. What happened from minus 40% to plus 33%? Efficiency kicks in when scale increases. Amazing. Very good. Very good. Scale is one logic. Okay. Boss, you have to answer this because you are going to go through this, the same thing in your own business, from minus 40% to plus 40%. Efficiencies with scale. More answers in the chat box. What everybody was answering, the gross profit would be 50%, 30%, some 800, 900, 700. What is fixed costs are optimized? Okay. Variable are getting there. Okay. Bargaining power with supplier, amazing, very good. Again, cost, very good, very good. More answers. I'm looking for more answers like Varun sir, please, more answers. Scaling will give you bargaining power. Okay, have a look at this. Have a look at this. This is coming from Beyond Meat 2019 annual report. See what they are saying about gross loss, what is consistent, how it is happening. Look at the last paragraph. As a result, we expect our cost of goods sold in absolute dollar to increase to support our growth. We expect such expense to decrease as a percentage of net revenue over time as we continue scale our business. The same logic of scaling up. The same logic of scaling up has been given in their annual report. Okay. Okay. Test your knowledge. So you have to work. What is contribution? What is break-even point? What is profit at sale of 700 unit? What is profit at sale of 1300? Take out your pen and paper. Everybody. You have to work. What is contribution in this example? What is contribution? Okay, have a look at this. Your sales less variable cost is equal to contribution, less fixed cost is equal to profit. If you want to note it down, note it down. Sales less variable cost is equal to contribution, less fixed cost is equal to profit. Pen and paper time. Yes. Okay, this is the question. So you have 3 minutes to answer this.
Hi Ram, could you go back to that slide? Yeah. Yeah, this slide. Thanks.
Once you start getting the answer, say for example, if you answer for contribution, you can write in the chat box. Anybody who got the answer of contribution? Break-even at sales of 1,000 piece, contribution is 200. Contribution is 200. Okay, very good. More answers. Contribution 200. Very good. Okay. Okay. Break-even point. Somebody answered break-even point. Okay. Break-even point. At least 5 to 10 answers. Amazing. Very good. Okay. More answers. Everybody has the same answer. We'll wait for 2 more minutes. One more minute. Keep posting your answers. $700 unit loss. Okay. Keep posting. Raw material cost, direct labor cost, depreciation, rent. Okay. More answers? Should we wait for 1 more minute or we should go to the answers? I see 3, 4 answers only. See, believe me, this is the simplest of the thing. It is just the mathematical calculation. Send your answers now, even if partial. Yes, please do that. Believe me, it is just mathematical. I just want you to have your hands on these numbers so that whenever you do your real life numbers, you understand what is going on. Nobody in this world should come and tell you some technical term and try to put it in a different direction. I just want you to have this mathematical calculation. It is not more than anything than mathematical calculation. So if you want me to wait for 1 minute, okay, send partial answers. Yes, please do that. Okay. We'll wait for 1 more minutes. 2 more minutes, I think. Great. One more entry and we will move ahead.
Cool,
Moving
let's
ahead.
continue, I think.
Yes. So these are the answers. Most of you have answered it correctly. It is simple mathematics. The only key is dividing your cost into variable and fixed. The only key is there. And there is one more technical thing when we go to unit economics. This is unit economics. This is the only unit economics which should be there. Okay. Okay. So shifting gears. Now, if you don't know what is costing, I saw a few questions which were shared by Shardul that where to start. I don't know how to estimate cost, what to do. Read this and it will answer everything which you are looking at. You all know Netflix, correct? You all know Netflix. Look at its business model. We have been using Netflix. Look at its business model. Just read this and it will solve all your questions about costing. Believe me, give 2 minutes to this slide. This is everything about today's discussion. Done. This is the simple idea. The story is grounded on the thesis made up of the real world modeling using actual numbers. Whenever you are thinking about costing slide in your pitch deck, whenever you are thinking about presenting your case to the investor for your stage, be very, very, very clear. Try to model it from real life as close as possible. Put it in your kind of thing, and then it's done. It's done. Sorry. And this is the only reason why anybody is going to invest in something like Beyond Meat in 2010 or 2011. Otherwise, no one would have invested in Beyond Meat. I can see he can do it. I know people are eating meat. I know they are paying this much money for meat. I know this will turn into a big market. That's it. That's it. We have the real numbers there. So anybody who is worrying about real costing numbers without manufacturing, I don't know, model it. So this is what costing has to do with the startup at the stage where you are. I personally believe look at cost only. Try to use NNN. Try to use NNN everywhere. And that is how any startup who is new in the category has to do. That's it from my side. I'm done. I think it is in 70 minutes. We are done. Thank you so much. Thank you so much to all of you. We are open for questions. You can ask any questions which you have regarding costing or unit economics. We are not discuss unit economics because it is a separate, a very, very different thing when it comes to unit. But simple thing is calculation remains same. Cost, sales less variable cost is equal to contribution less fixed cost is equal to profit. Calculation remains same mathematically. If you have any specific question in the chat box, you can write in the chat box. You can put your speaker on and put your question. Or we can
Firstly, thank you so much for that engaging presentation, Ram. I think it was one of the very few presentations where we have the expert speaker, tailor a lot of examples and case studies specific to the topic in question. So firstly, a big thank you for doing that. I think that made it all very interactive and easy to understand for a lot of our participants, because Beyond Meat is such an iconic company in this area that I'm sure that people are going to go, and I'll recommend everybody to actually go and visit their annual reports and other financial statements after this session, so that all of this fresh knowledge. And like Ram was mentioning, they've done a great job of explaining a lot of these terms. So I think that would be a great follow-up from this session. And now, obviously, like Aditya sent a question, please start sending in questions through the chat box, directly to everyone, or me, so that I can ask them to Ram. Thank you.
Okay, Aditya, assuming that sales for the recent year can be estimated, how do you project future sales and growth rate? Sir, tell me one thing. What is future sales? What do you think? So, okay. Let me share a very interesting thing with everybody, because this is the normal thought process going on in the industry. Tell me one thing. Do you, in the chat box, everybody, do you know what is the average age of Fortune 500 company? Average age, when I say average age, what is the average time period for which any company enters that club of Fortune 500 and get out of that club of Fortune 500, for that Fortune 500 club? Anybody in the chat box? Is my question clear? What do you think is the average age of Fortune 500 companies? For what time period that company is? 20 years. Okay. It could be 15, 20 years, 10 years. Okay. 8 to 10 years. Amazing. Very good. Fortune 500 entry 30 plus years, but shortening all the time. Very good, Varun. So what is happening in real life is something in 2000, in early 2000, something which was 20 years has now reduced to 8 years. In 2020, it is only 8 years. The company comes into that club and get out of that club in 8 years net, which was 20 years somewhere in 2000, early 2000. It is not 40, 50 years. It is reducing drastically. Now, what do you think? What is the reason of this reduction? What is the reason of this reduction? Do you think they don't have people, intelligent people with them? Do you think they don't have strategists with them? Do you think they don't know how to control cost? What is the reason of a Fortune 500 competition in innovation, competition technology, reducing barrier to entry? Okay, could be. Competition could be. It could be anything. To me, it is uncertainty. To me, it is the ecosystem which is changing with some technical thing. Okay, to me, it is basically the uncertainty in the ecosystem. The way we look at the ecosystem, the whole ecosystem is changing like anything. You don't know from where the competition is coming. That is why we see the life cycle of the company which is entering Fortune 500 company is reducing tremendously. Now, with this basis, tell me, I'm coming to the original question. How do you estimate your turnover for next 2 years, 3 years, 5 years? So first thing is 5 years estimate, don't do it. It is waste of time for everybody. Estimate for 3 years. Why do we estimate for 3 years? To get a sense and to understand how, if it moves according to my assumption, what will happen. So when you are estimating turnover for next 2 years or next 3 years, estimate it based on what kind of projection you think. Along with ecosystem changes, shifting consumer preference. It could be the whole ecosystem is changing, Rahul sir. The whole ecosystem is changing. So it could be consumer, it could be competition, it could be technology, it could be anything. And believe me, the pace of change has increased like anything. And that is why somebody who is in Fortune 500 cannot see that change. Cannot estimate, cannot forecast that change. How would we forecast our turnover for 5 years, boss? Why to waste your time in doing that? Do it for 3 years. How to estimate for 3 years? It is very simple. Estimate a turnover, estimate a growth rate. If investor will not like it, he will change the growth rate and see what turnover will come. It is all just the exercise to understand what happens in best case, worst case, what we call sensitivity analysis. So if you are saying I will grow at 30%, I believe you will grow at 20%. What is the basis of that belief? There is no basis. Either I believe that market will believe in 20%, and that is why I'm saying 20%. So don't worry about those terms. Just mention your assumption and let the investor play with the assumptions. Am I clear with this question, Aditya sir? Good. Thank you so much.
More questions, everyone? Yeah.
Apart from raw material, which are the area where major cost cutting can be achieved? Shantanu sir, it depends on where your cost is. It depends on where your cost is. If your cost, say for example, think about an industry where there is no raw material. Think about something like technology based. For Facebook, what would be the biggest cost? For Beyond Meat, what is the biggest cost? I see their R&D expenses, their biggest cost, which will continue for some time. Look at the part which is there. Whatever cost you have, you can control that cost. It could be marketing, it could be raw material, it could be anything. What do we consider variable cost in? Why do we consider variable cost in profits? Why do we consider variable? I am not clear with this question. Basically, what we say, your sales minus variable cost is equal to contribution minus fixed cost is equal to profit. What do you mean by this question? Why do we not consider variable cost in profit? We consider variable cost in profit. We reduce that, correct? Devika ma'am, please specify the question if I have misunderstood it. Personally, it is a bit difficult to calculate the process and equipment cost without entering the market. Are there resources that could help with this? Okay. Yes, you are right. It is a bit difficult to calculate the process and equipment cost without entering the market. It is very easy. I will tell you the way out. Okay, I think I'm good. Thank you. Okay, I will tell you a very easy way out. Do you know what process you are going to do? If you know what process you are going to do, try to contact any of the supplier of that machinery and ask for a quotation from them. They will give you quotation very easily. Okay? You know the cost. You know the cost. You have the return quotation with you for the cost. Reduce 20% because that is what is generally we see in industry. Whatever quotation they are giving, they will reduce 20% and you will go and negotiate. That is your cost. That's it. Get 3 quotation. You will understand what is the average price. If you are not clear on process, I believe that you should be clear on process. You should be surprised how few entrepreneurs fail to do this. Oh yes, you are right. Most of them fail to do that. What are the most critical financial forecasting factors which investors are going to see in our pitch deck? Boss, see, one thing is very clear. Look at Netflix. What do you think the investor would have thought, or when they have looked on their financial forecast? What would, if you are investor for Netflix, not today, think when they were trying to target the DVD player market in 1997, what would have you thought in the financial? What would have been the most critical financial forecasting factor that you would have seen? Tell me in the chat box. If you are investor of Netflix, what would be there in your mind? Nobody can hand it to you without effort. It's very easy. Varun sir, just call them, write an email and they will send the quotation. Identify 3 machine supplier, mail them, you will get the quotation. I mean, how few? So I guess gross profit. If you are looking at gross profit, if you think they would look at gross profit when you are at idea stage, it's a question mark. Will you look only at gross profit and say, are you investing? Okay. Let us go back. Let us go back to one thing. Okay. What is the gross profit here? Minus 40 crores. Market size. Minus 40 crores. Minus 15 crores. Will you invest in Beyond Meat? Yes, market size. Remember N and N principle. Even when your financial is there, I need a very strong narrative, and market size is one of the narrative. It is one of the narrative. So if I am investor, what I will look at, are you going to do this or not? And what is the total market where we will do? And then I will invest if it is at idea stage. Remember that matrix. You are at the stage where you have more narratives and less numbers. That is fine. That is absolutely fine. There is no problem in that. Should we include technical information about the product and the process in our investor pitch? Okay. Should you include, if that technical thing is something which should be kept secret? Answer is no. If not, if somebody can find it by Googling it, paste it. What missing in the table of Beyond Meat number is the market size. That is, are there fundamental driver in market which are creating the opportunity for Beyond Meat? Varun sir, think about this in this term. You already know what is next best alternative for Beyond Meat, correct? Everybody knows that. And I know that market for sure. I have seen balance sheet of all those meat companies. So I know who is your competitor. It's just matter of time when you get the price below to what they are selling. And most of people will shift from the real meat to Beyond Meat. That is for sure. How to assess if your pricing is competitive enough in the niche market? Okay, amazing. Priya ma'am, pricing. Okay, if you are the category leader entering, the first person entering the market, there is no answer to this. If anybody is telling you scheming strategy, this strategy, all this is, in my understanding and in my experience, these are all terminologies. It is the real thing is trial and error. If you are the first one, the category leader, the person who is driving this, it is trial and error. Look at Facebook. When Facebook came, what was the revenue model? How it determined its price? There is no basis. It is just trial and error. I don't know, 100 rupees, 200 rupees. It depends. So if you go out and ask the pricing strategists, they will say do value audit. Ask your customer what value you are creating. See, if you have a next best alternative, you can compare it. If you are saying you are at a place where there is no alternative, nothing, you are bringing something new, it is your price. Play with it. There is no system. There is no process. It is trial and error. Should one be scared to introduce the product which is slightly higher price but justified by the quality and value of product? It depends on your market. It depends on what you are targeting. It depends on your customers. It is 100% dependent on your customer. 100%. If the figure of niche market size aren't available and your product overlaps across categories and cater to a larger general market, which ends up being too vast, how do you pick your TAM? Okay. Total addressable market, how do you pick? So basically, it's all assumption based, correct? The figure of niche market size aren't available. Okay. And your product overlaps across categories and cater to a larger general market, which ends up being too vast. How do you pick your TAM? Take it to a larger market. Take it to the bigger market. Everybody wants bigger number, correct? I am not going to invest in you if you are going to tell me that my turnover would be only 100 crores. I am not interested in 100 crores turnover in 5 years, in 10 years. Correct? Correct. That is the whole idea. Tell me where you will scale up. Okay, look at this. How fast and how big you can become. The whole story is how fast, what is your velocity, and how big you can scale up. That is the only question which you have to answer in your pitch deck. If you answer this question, you get the investor at good valuation. Okay, thank you. We are done with
Any
the
more
questions,
questions, everyone? Please send in through the chat box. We covered the previous questions, right, Ram?
Yes, all questions are done. If I have missed any question, can you please repost? I don't think I have missed any question, but if I have missed, sir, at an idea stage, will our advertising style impact the investor idea of how our product will score in the market? Yeah, Rahul, I believe that at ideation stage, if I am investor, I would look at the total market opportunity and I will look at you. If I believe that you can do it and total market opportunity is big, I will invest in you. Will our advertising style impact the investor? I doubt. I will not be looking at your advertising style. When you say advertising style, I believe you are talking about where are you spending your money. Are you in print media? Are you in digital media? Advertising style is part of narrative through in a way. You can say narrative is everything. Everything that is not number is narrative. Thank you, Rahul sir.
Great. We'll wait for one more minute until new questions come in. If not, we'll conclude the session. So please send in your questions if you have any. If you have any questions about the deck or the presentation, if you want Ram to go back to any particular slide and explain something, please speak now. Great. While we're waiting for any more questions, Varun, would you like to quickly address our participants today?
Yeah, I think this was a really, really enlightening session. Shardul, you can hear me, right?
Yes, yes.
Yeah, this was really enlightening, really fun and interactive. Thank you so much once again, Ramji. Thank you. That was really great. And I really enjoyed going through those financials of those various companies and also their kind of calculations and all of their value proposition, all of that. That was wonderful. I hope everyone else also enjoyed it. Based on a couple of pieces of input we have been receiving from some of the participants, we've just taken a decision which Shardul will be emailing you about later to expand the allowance from 15 pages to 20 pages for this round. So thank you to all of you who have emailed us about the fact that it's difficult to fit in everything you want in 15 pages. Please note there is no pressure to expand your submission to 20 pages. If you were keeping it to 15, that's totally fine too. But we just wanted to make sure that everyone is comfortable with it. So I hope you'll take many of these insights and use them. Yeah, I see the comments coming in about how everyone's happy that this is that we've taken this decision. So yeah, I hope you'll utilize these insights, these wonderful insights from this session. Thank you so much, Ramji. Thanks, Shardul.
Thank you so much. I think there is one more question which has come up. If you want, we can. It is from Aditya.
Yeah, please, let's take it. Yeah.
Okay.
We still have time for 5 more minutes. So
Yes,
any questions
yes.
are welcome. Yeah.
Okay. If the volume sales is less, but the consumer spending power is high, does that affect the investor interest? Aditya sir, the simple answer is, will you generate turnover of 2,000 crores for me? If yes, I am with you. If no, I know there is no. Okay, look at Beyond Meat. Do you think it's profitable at 100 crore? Do you think it's profitable at 200 crores? It is profitable at 1,000 crore? It is not. It is not even generating gross profit. It is not even generating gross profit. I know the market is that your costing would be that it's not a matter of 1,000 crore. Can you generate 2,000 crore even with a lesser volume? I am more than happy. See, look at this. A financial investor has only one interest, and that is finance. I will come, invest in you, and I will get out. I am not worried about what happens to you after that. So that is the only point a financial investor would look into. Boss, it is very simple like that. Are you going to help me reach at this place in next 3 years? If yes, I will invest in you, or I will not invest. Either get new investor and I am out, or get the turnover to me. Aditya sir, I hope I have answered your question.
More questions, guys? Any general insights you want Ram to answer about, based on the concepts we've discussed? Anything regarding the evaluation criteria as well? You can ask it. If it's, generally answerable, I'm sure Ram would be happy to share his insights. We still have 4-5 minutes, so I'll just wait for a few more seconds.
Okay, I would like to talk on one thing. There was one question in the question list which was shared by you, and somebody was asking on pricing. Pricing, how do you price and somebody asked here also pricing if you are in a niche market, how if you are the category leader. Please take one thing with you for sure. Price and cost have only one relation, and that is when you subtract the cost from price, it works out to profit or loss. That's it. Price is beyond your control. Whatever strategy you are following, whatever you are doing, you cannot look at one of the question. How do you decide price for a niche market? You cannot. You have to do trial and error. And once you are in the niche market, if your competitor sees that, he will be there. And then the price thing it's market driven. You have only one thing, and that is cost. In this equation, price minus cost is equal to profit. In this equation, your target is profit and your control lever is only cost. Price is not your control lever. Do whatever marketing strategy you want to do. It is in long run. It could be a control lever in shorter run, where you find out a niche market, you are scheming, you are doing everything high premium, but high premium will not sustain. It is impossible in today's world where high premium can sustain. This is what I believe. So price, don't worry about price. It is market driven. Worry only about cost.
Yeah, and there was one more question about inclusion of indirect costs as labor, electricity at the stage of proposal. So just to answer a little bit about this, I feel every team will have a different core idea or a core solution that they are trying to do costing for. And again, some of these things, like if you know your process has very intense use of electricity or very intense use of labor, so it's obviously useful to include those costs in. Again, how nuanced those costing parameters should look like, again, like Ram also suggested, look at the competitors, what they have as parameters of costing, and at the same time, think for yourself whether those parameters are applicable to your specific idea or not. Again, in how depth do you go, it really depends on you and your competition, how everybody ends up doing that, and relatively everybody would be marked on your proposals. So hope that answers that bit. And I think yeah, I'm just looking at some of the questions you had sent from the form as well, if they've been covered, so that in the last 2 minutes we could do those.
So we have one question in the chat box.
Yeah, please go on.
Okay. So what I see, sir, our product being a primary of vegan concept, should we also consider animal meat product market as a competition? Look at Beyond Meat, what Beyond Meat was saying. Next best alternative. Remember this NBA. What is the next best alternative to your product? It is the meat, correct? That is what they are also trying to do. That is also what they are trying to do. Price parity with one of our product at least in next 2 years. This is what their target is, because they know once they do the price parity with meat, it is done. Everybody will shift to their product. At least 90% will shift to their product. So your competition is everything. Everything which is next best alternative for your consumer is your competition. How much profit margin in terms of percentage we should focus on early stage product launch? Interesting. I don't know. It depends on you. What is profit margin? Profit margin. So profit margin is a mathematical answer, correct? Sales minus cost is equal to profit margin. So try to reduce your cost as much as possible. That's it. It is beyond your. What I think is it depends. I've seen companies with 20% profit margin in IoT kind of setup doing amazing. I've seen company with 60% profit margin in logistic kind of setup doing very bad. So it depends what your general market is behaving. If you look at Beyond Meat or you benchmark with Beyond Meat, it is 30-40% of profit margin is good because the industry leader is doing that. Great, sir. Thank you. Thank you.
Great, awesome. Thank you so much, Ram, for joining us today for this session and sharing a bunch of insights which are definitely going to help our participants, not just in this proposal, but also think practically in terms of their own business while presenting to investors, while just talking about these things. The way you explained all of these concepts, some of them were very technical, but I'm glad that it was a great refresher for many of us. And I'll just quickly run a poll so that everybody can take it. If everybody can take 20 seconds to rate today's session, that would help us, curate better sessions going forward. And then with that, once again, a big thank you to CI Eco team, Sonia, Sushmita, Eric, for helping us organize this. And we look forward to, tomorrow's session. Like Varun said, the proposal limit is extended to 20 pages. I'll send the formal email confirming this to all of you, but please inform this to your teammates as well and any other friends from the challenge. I look forward to seeing you all again tomorrow, same time. Nicole will be hosting the session from our end. So make sure that you bring all your queries about the pitch deck for us. Sushmita, would you like to quickly tell, since you're conducting the session tomorrow, to our participants of what kind of preparation they should be doing?
Uh, For in terms of preparation, I think come up with all the questions you have, right? And I'll try to answer as many, and we'll try to cover as what a typical pitch deck should look like, what it feels, and what people look at it when they look at it. I mean, when they view a pitch deck, content wise as well as storytelling. So I think we'll try to cover all of those things, more or less. But it would be good if you come up with all your questions, and there is no good bad question. Everything is a valid question, and we'll take it from there.
Perfect. Yeah, I'd recommend everybody to bring your first draft since the submission dates are close anyways. So I'm sure that all of you have already made your first draft. Bring it, keep it open on the side, make changes, take feedback, put in it as comments during tomorrow's session, and I'm sure it will add value to your submissions. Once again, take a look at the guidelines sent for the making of the 15-page, now 20-page proposal. And in the second section, there are a bunch of details around what we're expecting in a pitch deck, and some session recordings from our Smart Protein Summit as well were sent to you earlier today. Make sure you take a look at those as well before coming to the session, so you have more specific and pointed questions for Sushmita. Once again, thank you so much, Ram and CICO team. Thank you so much for joining us, and have a great night ahead.
Thank you. Thank you.
Thank you, everyone.
We'll close down the workshop now. Bye.
Bye.